typically a venture fund, early stage venture fund might have 20 or 30 portfolio companies in it, and there's a very high failure rate. And so the companies that actually succeed need to have very big outcomes in order for the venture fund to be able to return capital to its investors.
We can really only go up now. There's no more lanes to build, and even adding one lane doesn't really help. So we recently announced an LA network where I have people coming up to me telling me what their favorite route is going to be, whether it's Santa Monica to Orange County.
Air travel is going to be the largest emitter in the transportation sector. Transportation is the largest contributor of greenhouse gas emissions, with the exception of food production and food transportation. But if we want to continue to connect the world in meaningful ways, allow people to connect with the global marketplace, and at the same time reduce its impact on climate change, we have to make these significant investments in this space. All right. Well, thanks so much for being here. It's great to be back at John Adams Middle School. This is actually my alma mater, so it's kind of fun to be back on the stage. Last time I was here, I was playing the trombone in the John Adams Middle School band. But it's cool to have a conversation now about investing in technology and entrepreneurship. And we're joined here today by some fantastic entrepreneurs that are building really audacious companies, things that are really, really hard to do. And when the organizers of this event asked me to organize a panel around investing in deep tech, I thought, well, do you want to hear from a lot of investors, or do you want to hear from the founders that are actually doing the hard work, and ask them how they're raising the money that they need in order to be able to execute these big visionary goals. So before I jump into a few questions, I just want to set a little bit of context about where we are here in Santa Monica. For those of you who don't know, Santa Monica has been the center of aerospace innovation for more than 100 years, and all the founders here are building breakthrough aerospace companies today. 100 years ago, 1924, the first airplanes that ever flew around the world were built in Santa Monica and took off from the Santa Monica airport and returned 6 months after departing. And that was the moonshot of the era, to fly around the world. It's absolutely incredible. It connected people around the world for the first time in ways that had never previously been possible. And in the 40s, during World War II, Santa Monica was actually one of the prime targets of the Japanese Air Force. If they had made it past Hawaii, this was a big target for them, because the Douglas Aircraft Company at Santa Monica Airport was building transport airplanes, fighters, bombers for World War II. In fact, the Douglas C-47 was the aircraft that dropped the paratroopers on D-Day. Those were all built right here in Santa Monica. 45,000 employees were building airplanes here, including Rosie the Riveter, for those of you familiar with the story of the famous woman and a whole group of women that built airplanes during World War II. So we're in a really sort of a sacred place for the kind of work that these entrepreneurs are doing. And it's just really cool to be able to talk about this here. So what I'd like to do is ask each of our entrepreneurs here to talk a little bit about what they're doing. Each of them has a little bit of a different flavor on electrifying aviation. And I want you to kind of get a sense for what their products are and how the general public will be able to use those products. And then we can get into a little bit more detail on the path that they're on, how you raise money, how you build a team, how you execute a plan like this. So let's start with Kevin, the CEO of Ampere. Kevin, tell us a little bit about Ampere.
Great, thanks, Ben. So Kevin Nordker, co-founder, CEO of Ampere. At Ampere, we founded the company 8.5 years ago with this vision for how electrification technologies would transform the aviation industry, maybe to as great of an extent as the jet age did, half a century ago. What we've decided to do as a company is we focus in on the propulsion of airplanes. So rather than architecting clean sheet design planes like you'll hear about, we're really focused in on this novel propulsion technology that repowers both the existing class of planes, so the hundreds of thousands of planes that are already out there, really the battle for sustainable aviation in the planes that are flying, and as well as providing power systems for all of the future aircraft that get built. Now, instead of focusing on just the aspirational future, we've also taken a very practical approach. So much like you saw in ground transportation with electrification, for decades has started with hybrid electric, and in fact started with infrastructure independent, that is, you didn't have to plug into your Toyota Prius. Similarly, that's how we see the beginning of aviation beginning. So our hybrid electric propulsion systems have been flying for the last 5 years, and full-scale prototypes and demonstrators we've deployed with airlines as far west as Hawaii, east as the UK, flown up to Alaska through Canada, and a lot of real-world learnings from those. So we hope to be able to bring this technology first into the regional aircraft that you might see in airports like the Santa Monica Airport nearby, and then rapidly scale up into the regional aviation and bring this type of technology, for example, into greater levels of electrification even in transport class planes. So electrification as it affects the world around us.
Great, thanks, Kevin. So if I was to sort of synthesize that, it's kind of the Prius approach to airplanes initially, right?
Exactly, it's the Prius engine approach, right? Not the new vehicle, but really the propulsion Prius.
Great. Yeah. Okay, Anders is building a really cool company called Heart Aerospace. I won't steal your thunder, but also kind of going after a little bit different of a hybrid approach. So maybe you can share a little bit of what you're building.
Yes, so at Heart Aerospace, we're building a hybrid electric aircraft, and we are building a clean sheet aircraft. In fact, we rolled out our aircraft only a month ago. So it's a 30-seater aircraft that is propelled both by electric motors and by traditional turboprops. And in doing so, you can fly the short routes up to 125 miles on batteries alone, and that range will improve as technology improves, but also fly routes up to 500 miles with much reduced emissions. So we're taking the approach of doing everything in that sense. So this is a clean sheet design. Actually, the rollout of our aircraft is the first time we see not only an electric aircraft in the Part 25 category, but actually the first rollout of a Part 25 aircraft in the industry as a whole. So Part 25 is a passenger category aircraft in the last 12 years. And it's 17 years since Boeing did their last clean sheet design. So we think that it's really important to understand that electrification is not only about creating a green product. Propulsion and propulsive efficiency has been the driver of this industry for the last 60 years. And without improvement in our propulsive efficiency, because it's very linked to cost. So there are no new developments. There's nothing happening. If you can't build a propulsion system that's 20% better than the last one that's out there, you don't get your money back for investing in a program. So that's why this technology is so important. And what we're showing with our aircraft is that it's not only about small aircraft. So what we're building is a 30-seater aircraft. It's a 106-foot wingspan. So it's when it flies, does its maiden flight in April, it's going to be the largest electric aircraft ever to fly. But also we see this going up to 100 seaters above, et cetera, especially when we're using the hybrid system. So that's really exciting, and we're working to have this enter into service in 2029, so before the end of this decade.
That's great. Thank you, Anders. Miles, tell us a little bit about Archer.
Hey, Ben. Thanks for having me. Appreciate it. And great to be in Santa Monica. And as you mentioned, I mean, 100 years of aerospace innovation. And we really, I know all of us would agree, we hope that continues. And this truly is the future. Archer is a publicly traded company. We have an eVTOL aircraft called Midnight. And it takes off vertically like a helicopter and flies forward on a wing like an airplane. It's an incredibly designed aircraft. I've been in private aviation for 20 years, and the biggest thing that drew me to this company and the aircraft was just how incredible the design is and what it's going to do for people in busy cities. We can really only go up now. There's no more lanes to build, and even adding one lane doesn't really help. So we recently announced an LA network where I have people coming up to me telling me what their favorite route is going to be, whether it's Santa Monica to Orange County or Burbank to potentially SoFi Stadium, and just some very exciting routes. The average person in Los Angeles spends about 100 hours a year in traffic. And that doesn't even include the trips they don't take because the traffic is so terrible. I think Ohtani bobblehead night took 4.5 hours to get into Dodger Stadium. Go Dodgers if you're cheering for them. So we're really hoping to decongest some of the busiest cities in the world, and really excited about the opportunity.
That's great, and you can start to see just how challenging it is to do these projects. I mean, in the case of an eVTOL or an electric vertical aircraft like what Miles and Archer are doing, you're not only building a whole new type of propulsion system and a whole new type of aircraft platform that can go up like a helicopter and fly like an airplane, but you also have to build infrastructure where these things are going to take off and land, and we have to have an air traffic control system that will manage all of these flights and so forth. So you start to get a flavor for what it means to really build a deep tech business that can have massive impact. Okay, Aloha, let's hear a little bit about Beyond Aero.
Yes, thank you, Ben, and thank you, everyone, for your interest today. So I'm Eloa, the co-founder and CEO of Beyond Aero. We are working on a hydrogen electric private aircraft. So it's a CS-23, so FAR-23 is a small aircraft, private jet, fully electric. But the idea is to have a longer range using hydrogen propulsion. So we are using gas hydrogen tanks, fuel cells to power 2 electric engines. And we are taking the clean sheet design approach because of the weight and the volume of the tanks, especially for this size of aircraft. So the company is about 3 years now, and we've worked on 2 different things on the side. One is what would be the architecture of an aircraft made for hydrogen propulsion. So we've worked on 100 different types of design, and now we have converged through one architecture that is able to carry 6 passengers on 800 nautical miles. So the market would be more European capitals, or LA, Las Vegas, San Francisco, like the traditional routes of a business jet. And the second thing we have worked on is a bit like you said, Kevin, on learning by doing and prototyping a lot. So we flew our first subscale powertrain a few months ago in Europe, based in France. It's a 85 kilowatt fully hydrogen electric aircraft, manned, not a drone, but with a pilot. That was a big moment, and we've learned a lot. So happy to continue the discussion about the fundraising and more. We are today 50 people based in France and in the US. We raised about 40, and happy to discuss the challenge we are facing.
That's great. So great segue. I think now that we've learned a little bit about each of your companies and the important things that you're building, let's talk about sort of that journey. Although maybe you can start with us. Tell us about the founding of the company. How did you get it started? Why did you start? And then, what were the first steps to, getting a foothold and raising your first capital?
I'm going to try to do the short version of it. At first, we are 3 co-founders, and just before starting the company, it was COVID time, and we thought about what is our passion and our definition of success. What do we want to do in life on a personal level, but what is the success of a company? And our 3 former aerospace engineers, we loved aviation, and Valentin was working on electric engine at Safran, and we realized you have more and more subsystem getting certified now, but not enough OEM being the final integrator, especially on electric engines, but fuel cells and way more. I don't know if you know, but Airbus is working on a hydrogen aircraft program, so that means you have the airports, Airport de Paris, so infrastructure that are being modified to be able to provide hydrogen. That means you have EASA working on hydrogen certification. So it's not just Beyond Aero, it's an entire wave. And so that's what led us to start something. So we wanted to build this electric aircraft. We didn't know what was the size and what would be the market. So the first thing we did was to do a prototype and study the market. So I did hundreds of different interviews, pilots, airlines, ultra-high net worth individuals, and we realized it would make sense to start with a private jet. Because those clients, either they do care for the environment, either they don't, but they have a public image and they can also invest in the company. So that's helping a lot, for sure. Another pillar was to rely on the existing technology. We are not coming out of a laboratory with a special IP. We said we will partner with the best suppliers and assemble everything on the shelf. And the third was to stay below 8.6 ton, so FAR 23, to be able to be as fast as we can, but of course it's going to take a few years. Coming back to fundraising, so that's what we've pitched pretty much from the beginning, and it stayed over the last 3 years. We did 4 rounds, so cumulative of 40 million. And the beauty of Europe is to have a lot of non-dilutive. So for $1 in dilutive, you can have about 1 in non-dilutive, in debts and grant. So it's a mix of both. And then you balance how you want. So I do believe such a companies can be a success if we have the support of government or region. It's difficult to only rely on VCs and fundraising for such massive improvement, but happy to have your insight on that.
Yeah, so I think this is a really interesting point of discussion around non-dilutive sources of funding for deep tech companies. Those of you who are venture investors understand venture math, and maybe I'll just quickly highlight a little bit of it. Typically, a venture fund, early stage venture fund, might have 20 or 30 portfolio companies in it, and there's a very high failure rate. And so the companies that actually succeed need to have very big outcomes in order for the venture fund to be able to return capital to its investors. So typically, venture funds are looking for investments that could potentially return the entire fund. Even though you have 20 or 30 companies, if you have 3 that win and each of them returns the whole fund, you have a 3x fund, and that's sort of mediocre. So the problem is that as these companies get further along their journeys, they need to raise more and more capital. The earliest investors are diluted, and so even if the company has a giant win, the earliest investors may not own very much of that giant win, and so it's hard to do this fund returning investment thing. So that's where the non-dilutive capital comes in, because these companies can now raise more money from other types of sources, like from governments that want to see them succeed, and who are not expecting any money to come back to them. And so that helps. We'll talk a little bit more about that. But I think I'd like to go over to Kevin now. Kevin, you've had an interesting journey with your company. Lots of pivots, avoided several death blows that I know of, and probably a lot more that I don't know of. So, I mean, really a resilient entrepreneur here. Why don't you share a little bit about your story from post-funding till today?
Sure. So high-level context, we've raised about $30 million venture and about $25 million in government grants and contracts. So almost that 50-50 split. I think that especially when you're looking at ventures in this area, it's very much what is the path that you choose to walk. There's a bit of efficiency in the decisions you make day to day, but the path you walk down drives the slope of spending. And sometimes it takes $1 billion or multiple $1 billion to bring a new product to market. Other paths are much more capital efficient. So we've always come at this with a lens of that capital efficiency toward becoming a legitimate company, selling products that are good economics for both the buyer and the sellers. And this is the framing for return on investment for our investors, speed to market, and all these factors as we've looked through the opportunities. So we raised pre-seed and seed round, basically friends and family, pulled on our first venture investors, raised a Series A in 2020. And a bit of entrepreneurship is also about reading the tea leaves and looking at timing. And in late 2020, as we were raising our Series A, and I mean, for a year leading up to that, I remember we spoke in November of 2019, we're looking at a SPAC opportunity. And that opportunity had eye-watering both valuations, but more importantly, access to capital. You're looking at hundreds of millions of dollars of operating capital coming into companies for relatively modest dilution, and then enabling you to drive forward. So we dabbled in that, ultimately pulled out of that deal in early 2022, seeing the risk of going forward with entering the public market, especially through that SPAC process, being an unnecessarily high risk for our organization, which can do just fine privately. Dodged that bullet. And then also when you look at whether it was COVID or you have the interest rates and other things more recently, Early last year, we had some issues with an LP on one of my, was going to be lead investors who didn't ever wire money. So I mean, these are like potential death blows to organizations. We've been very resilient because of the path that we've chosen. Capital efficient. I think on the flight miles per dollar spent, I'm 50 times more capital efficient than Joby. I don't know Archer's flight miles, but probably some similar order of magnitude. And I think that this is also how you enable yourself to survive the hardest times. We're in a moment of reckoning in this industry. A lot of credibility has been broken because of companies raising a lot but not hitting their milestones. And I think especially in these times, or in the higher interest rate times when capital is not free, it's all the more important to have strategies that are resilient. We were able to put Ampere cash flow break even after that term sheet issue. And for the last 18 months, I've been cash flow break even. Government contracts driving us toward commercialization. We even had the FAA accept our certification plan while cash flow break even, right? So like this is great progress, and I think that these are strategies that are resilient. And thank you for calling me a resilient entrepreneur. I appreciate that.
Yeah, it takes a, it takes a, this is the journey of wooden ships and iron men, right, to get through this. So Kevin mentioned SPAC a moment ago. For those of you who don't know that term, it's a special purpose acquisition company. It's a concept that's been around for decades. It's a way to go public by basically taking a shell company public first and having the shell company buy a private company. And it's a sort of simpler path to an IPO, to an initial public offering. This gained a lot of heat in the post-COVID zero interest rate period, and then quickly evaporated thereafter. But many companies in this space were able to raise a lot of capital through that mechanism, and Archer is one of those. Why don't you, Miles, tell us a little bit what it's like to be a public company now, and how do you find access to additional capital?
Yeah, so Archer is publicly traded on the New York Stock Exchange. We recently, or almost a year ago, went back there to announce a partnership with NASA, where you get to kind of ring the bell again. And it's just amazing to see the companies that have come before us. Archer has raised about $1.5 billion. And as you talk about, it's so important to have the right partners as you go about this. And I think one of the special things about Archer is the support of some of our major partners. United Airlines, they've done an order of about $1.5 billion. We've announced our first route with them that people are really excited about, and they continue to support us along the way. The other is Stellantis, which is one of the largest automakers in the world. They own brands like Jeep, Maserati, and Ram. And through a high-scale manufacturing facility with them, we will be able to produce about 650 aircraft a year. And while it's great to have investors across a wide spectrum, it's also critical to have investors that are going to support you on your mission and also be there every step of the way. Those two are the big ones that really help drive the machine. But we've also announced a partnership with Southwest Airlines. And then you look in the international markets. Traffic is not just a problem in the United States or California. We're doing some great things in Korea and Japan and India, and especially significant global interest in UAE, where there's some great funding coming to Archer and supporting our initiative. So it's not one thing, it's a global thing, but we're truly inspired by the support that they're giving us.
Yeah, I think the message there is you have to turn over a lot of rocks to get the right partners, right? And each of these have done that. I mean, Kevin.
Well, between all of us, we could ride on the plane, do the last mile on the arch. I mean, we could all collaborate on the ultimate transportation experience.
Exactly. So, Anders, maybe share with us a little bit about your funding history. I know you went through YC, Y Combinator, which is one of the most famed accelerators in Silicon Valley. Typically, you've done software companies. I think you did too, right? Aloha also went through YC. So maybe share with us a little bit of that experience in a deep tech company in YC, and then how the funding's progressed since then.
Yes, so Y Combinator is obviously, as you said, the most famous startup accelerator in the world, and it's one of those places that yeah, we have companies like Stripe, Airbnb, et cetera, got started there, and we went there in 2019, and we'd seen in the few years before that companies like Cruise Automation, Boom Supersonic, hardware companies, hard tech companies, were coming through that. So that was like probably the only way we saw, and back then I was based in Sweden as well, to sort of gain the credibility of being a seed stage startup, and you say, I'm going to build a commercial aircraft. So we went through that. We raised our first round through that. We went back to Sweden to build our first propulsion system. We demonstrated that. And then we raised our Series A round with Breakthrough Energy Ventures. So this is Bill Gates' climate fund. United Airlines became our anchor customer. They wrote an order for 100 aircraft and invested in our company. And Lower Carbon Capital, which is also a local, one of the largest climate funds, but also based here locally in LA. And yeah, and we just closed our Series B less than a year ago. So far we've raised about close to $150 million. And yeah, this is a capital-intensive thing, but it is also important to understand that air travel is also a massive opportunity. It's a market. Air travel is going to be $1 trillion market in 2027. It's growing about close to 5% every year. There's only about 20% of the world's population that's been on an aircraft once. And there's 6 billion people looking to get connected. So, air travel is the future. And I mean, there's no other means of transportation that is as good. Like we're 10 times faster than anything else. And it's also a tech product. I think it hasn't been run like that in the past, decades. But as you mentioned with the sort of history here, it used to be something that was very engineering driven, that was driven by an engineering culture. And with a tech product also means that this is a high margin thing. An aircraft, if you take the cost of materials for building an aircraft versus the cost, what you can sell the aircraft for, it's not 10x, it's like 100x what you sell a sort of similarly sized electric bus for. So that's what makes it such, I think, an interesting market to be in and play in. And also, it's solving a real big problem, which is by the middle of this century, air travel is projected to be the largest emitter in the entire transportation sector. So it's a very, very relevant, sort of rewarding and interesting space to play in.
Yeah, it's a great point that air travel is going to be the largest emitter in the transportation sector. Transportation is the largest contributor of greenhouse gas emissions with the exception of food production and food transportation. But if we want to continue to connect the world in meaningful ways, allow people to connect with the global marketplace, and at the same time reduce its impact on climate change, we have to make these significant investments in this space. So I think that's why you see a lot of investors investing there. And to that point, both Anders and Aloha recently relocated from Europe. I think it's interesting, maybe if you could both comment on sort of why you've made that move, how you're splitting the work with your teams between Europe and Southern California, and also maybe just touch on sort of the difference in perception around the sustainability opportunity in Europe and in the US. That'd be great. Aloha, you want to go first?
Yeah, a lot to say. It started first by the vision of the company, which is not just to build this first aircraft, because that's going to take, let's say, worst case scenario, 10 years, because it's a small aircraft. But we want to scale the size of the aircraft. So by having this vision in mind, we said we studied in Toulouse, so it's a city of Airbus. You have more than 23,000 engineers, aerospace engineers in Toulouse. So like, okay, this makes sense. We had friends of friends of friends from PhD hydrogen labs. We said, okay, so the first initial team was really based in Toulouse. But then quickly we realized we won't be able to build this great company only by hiring people in Toulouse. So we started to fly all over the world and open the Langate. So we switched from French to English inside the company, and we started to be way harder on the culture aspect of not being French inside the company, to hire people internally, externally, and now we have more than 10 nationalities. So 10 out of 50 people, which is a lot. We have Greek, we have Spain, we have US, American, quite a lot of different nationalities. So that was a big first shift, and then I was just called again here by meeting clients and investors, and which is most of my job. So first side was people, but the second was where is the market, and where do you have investors? And for such companies, I find it so difficult to raise money online for everyone, for sure, but especially for such a company. So I always push to meet people in person, and that means in California. And most of the time, Aerospace was LA. So I was just back and forth here, and at one point I said, okay, I'm going to apply with a real visa and be here and stay there and have an office. So now we are building the office over there. We are only a few people for the moment, but we're going to grow a bit. But we have this strict rule of we keep the R&D and all of the engineers in the same building in Toulouse, while we are open to have different branch for communication, marketing, fundraising, and clients here. So it's a good balance. Today it has opened a lot of doors. Maybe one day it's going to be more difficult, more about the time zone and jet lag, but today it's working well.
Yeah, I think it's interesting that Europe has been seeing a lot of pressure on airlines to reduce emissions, and you have this sort of flight shaming and so forth. And despite that, not as much appetite to invest there as you have in California. I guess we have a little bit more risk-taking things here, huh? Anders, what do you think?
Yeah, I mean, so it's interesting. So our company is come of age at the same, like in Europe, in Sweden, we have this word that came out exactly like the same year as our company was started, which is called flygskam, flight shame, essentially where you're embarrassed to tell people you've been on an airplane. And it's actually led to about a 20% decrease in air travel in Sweden, and really then hurting regional connectivity. So, and as you've seen the similar numbers in Germany, etc. This has led the European government to take a very aggressive role on decarbonization. So in Norway, our neighbor country, one of our inciting incidents was when they announced that they want all their domestic flights to be 100% electric by 2040. I know you spent some time in Norway as well. So there, Europe is sort of bringing the mandate. Europe also has EASA, which is it's a little bit ahead. Like the first electric aircraft that has been certified was a Slovenian aircraft, a small team in Slovenia that built and certified with EASA. It's now certified in other jurisdictions as well. But it doesn't have, so there's things that are great with Europe and a good engineering culture. But obviously in the US, this is where all the capital market is. There's a much broader support for things like when you go to flight test, when you go to industrialization. I would say US in general, and I mean we really share our love for Los Angeles, but the engineering culture here, this is really the ground zero of new aerospace. And what we're really trying to do is bring this really the SpaceX methodology to building spacecraft to the aircraft industry, and there's no better place to do that obviously than here in Los Angeles. So we're trying to get a little bit the best of both worlds here.
Yeah, I think it's quite incredible to see SpaceX, for example, catching a booster, on the first try with something like 10,000 total engineers in the whole company. People here are just willing to take audacious, goals on and actually execute them and complete the job. So that's great. You mentioned industrialization. I think that maybe the last topic for our panel today. You do anything deep tech, you have to develop a product. You have to usually get it in some sort of certified or qualifiable state, depending on what it is. Sometimes that takes 15 years. I've recently become a Waymo customer here in Santa Monica. It's such an awesome service, and it was sort of a 15-year overnight success where we've been hearing about self-driving cars for so long, and people said, oh, it's never going to happen, or it's going to happen a long time from now. It's going to take forever. And then one day, a Waymo shows up driving past my house, and I was like, wow, this is cool. And I downloaded the app, and it's fantastic. And I think these are going to be 15-year overnight successes as well. But then you need to scale up production, and that means industrialization. And so that's kind of the next major phase of capital requirements for deep tech projects like this. Maybe whoever wants to go first, I'd love to kind of get your take on what that transition is going to look like from getting a product ready to scaling up production and supporting those customers.
So I think this is really where things get real. When we think about the commercialization of our products, so we're upgrading turboprop planes with hybrid systems, we think it is the fastest path to commercialization, which means we will bear the eyes and minds of the world. We may be the first hybrid electric or electrified plane that's commercially operating in any of these areas. It'll be like the Waymo driving by your driveway. And the reality is, if you do that well and you delight customers and you build out the infrastructure for maintenance and support and spare parts and all of these other things that have to come subsequent to getting the plane designed and certified, if you do that well, then you actually lay a great foundation for the future of the industry. If you do it poorly, people will not just disapprove of your product and your company, but they may actually sour on the rest of the industry. So this is something internally to Ampere that we take very seriously, because we're on track to be the first one out of the gates in a lot of these markets. And it's about approaching with a level of thoughtfulness and maturity along the ways, not trying to shortcut. It's about partnering very closely with the stakeholders. You're basically, an order of magnitude more stakeholders when you have something out of the R&D lab and in the real world, and making sure that we're also mitigating the risks that that would otherwise hold back success in that industrialization or commercialization. For example, not having to install plugs at every airport you fly to because you're infrastructure independent. We think that these are the types of things that are going to help delight the first generation of customers and hopefully lay a great foundation for the rest of the innovators who will be coming thereafter.
That's great. Miles, maybe tell us a little bit about the manufacturing facilities you guys are building.
The manufacturing facility with Stellantis is in Covington, Georgia, and we're excited about rolling the first aircraft off the line next year, and we'll celebrate that moment. We just delivered our first aircraft to the United States Air Force, and we have the largest contract with them of any eVTOL company, $147 million. And you think back to America's leadership position in aviation, and I know we all truly hope that continues, and that's why, that's why you came over here. Everything from the Wright brothers to where we're trying to go in the future. And a lot of Douglas aircraft that were built here actually, participated in Normandy. So you think of whether it's national security, whether it's innovation, we're excited to build this aircraft made in America, Covington, Georgia. And really, Ben has amazing stats around the number of jobs that this really creates. And when we really get that facility up, everybody's excited about what that's going to do for the world and bringing the aircraft in a sustainable aircraft to skip traffic and to keep our industry and keep innovation moving forward.
Great. Well, I hope all of you enjoyed hearing from these amazing leaders and just getting a sense for what it takes to navigate building something really big and important that requires a lot of capital. And thank you for inspiring us. We'll look forward to speaking maybe in another year about the progress they've made. So thank you so much.
Thank you. Merci beaucoup.
Thank you.